Good evening, everyone. Welcome back to the channel. We're finally joined once again by the one and only Jay Pestrichelli. Jay, thank you so much for coming back on.
Great
And
to be back, Coach. It's been a
ab-
while.
absolutely.
By the way, that's my fault, not yours.
Yeah, well, I mean, you can go into this briefly, but there was kind of a little bit of a merger. But you've probably got more going on now, I would think.
Yeah. So just 2 seconds on that. Right. So
Yeah.
Zaya Financial's trading business merged with Title Financial Group's trading
Mhm.
business, who was always the advisor on all the funds. You don't ever hear the name Title very often, but they were the advisor, the trust board, the administrator, and Zega was the sub-advisor trader. We just brought those two groups together. Right. So we just wanted to kind of get through all of that, trading integration, team integration, all that kind of stuff. Made sense to just put some of the discussions on hold. All the same people that were trading the funds that you've talked to me about in the past are still trading actually there's more now, but it's still the same team trading the funds that you had before. So our goal was to have zero disruption. I think we achieved that fairly well. So we can continue to kind of move forward and innovate and expand. And, now I don't have to worry about things like, an HR department or, paying, insurance, right? Like it's all lumped together, right? It's just a better operation just to leverage kind of the strength and the size of Title versus Zega.
Awesome.
There you go.
No HR. That could be a lot of fun and a lot and dangerous.
Well, actually Title has an HR. Zega did. I was HR, which was a terrible decision. There you go.
I'm my own HR for my channel, so
There you
I can
go.
relate. So we kind of have a self-starting audience. So we've got a lot of people in the audience that are trading their own options and stuff, doing the
Awesome.
wheel strategy and all that. So there's been a lot of people actually wheeling this SMCI fund. Not that's the stock. I'm sorry, the underlying
That's the
stock.
SMCI is the stock. Yep.
SMCX.
Oh, the
And
leveraged. Yeah, sure.
yes, this one is insanely volatile. It's like a couple days ago, it was over $100 a share. Then it was like down to 50 today.
Well, it's a super volatile ticker, right? So
Right.
all their registration filings, just in and of itself, the underlying company has
Mhm.
all kinds of risk. You don't know what's going to happen. Are they going to get kicked out of the NASDAQ? Are they going to stay? So that volatility certainly brings opportunity to be a winner or a loser. And if you're trading a 2x leveraged on the most volatile stock of the week, could be home runs, could be disasters. Yeah.
Mhm. Yeah, some of us have certainly had home runs in those. I mean, it gets tempting with the juicy premium for sure.
Yeah. For sure.
Um,
For sure.
Now, one question that's been at the top of the list. So Tesla recently fell back below $10 a share. What would you say the risks like of another reverse split?
I would say, you can never really tell what's going to happen, but if you're trying to gauge our behavior, why don't you look at MRNY?
Yeah.
Take a look at AIYY, right? Murney is at what? Sorry, I'm just looking at my other screen. Sorry to turn my back to everybody. Murney is at, where is that thing? $3. We have not reverse
317.
split it. So hopefully that answers your question. By our
Absolutely.
actions. Yeah.
Absolutely. Yeah. There's a Rec Shares one too, not within your purview, but similar MSTU that's like around here too. A lot of the
Yeah,
same.
look, I think
Yeah.
I would tell you this, like we're not oblivious to the sentiment of our investors, and there's a fair amount of negative reaction, whether it was warranted or not, it doesn't matter. Perception is reality. With the reverse split of Tesla in the past, that was heck, I don't know, was that a year ago? It was over a year
Yeah.
ago at this point. So
Last February.
yeah. So, unless we just thought, what, people don't want us to, so we'll just leave it. It doesn't change. Like it goes to the point. It doesn't matter one way or another. So, and as long as people don't mind that it's not marginable or, maybe they can only do close, who knows how a broker is going to treat it. I don't think we're going to make any changes to it until we have to. But again, you never know. If we get forced to do it, we'll do it. But I mean, if we would have done one, it would have been that one, right? By the way, we probably would have had to have done it twice since, but you never know. That's been a tough fund because the underlying's having a tough time, right?
Right. And a lot of it's dependent on the underlying too. I think everybody's starting to really get that. Okay. next question here. We got a funny one. Someone asked if they buy a hardcover copy of Buy and Hedge, would you sign it?
Sure.
Yeah.
Absolutely. If you could find me. I'm not hiding, by the way, but like, sure.
Yeah. Awesome. How about a fund
I'm
for
not sure what it
upcoming?
would do to the value, up or down, if I signed it. Up to you.
Yeah, yeah. How about a fund for upcoming quantum stocks?
Yeah, quantum. So here's look at the list of stocks. So yes, that sounds really great. It's obviously something that we've looked at. I worry about market capacity on a fund like that because a lot of those stocks have low market cap, right? So, and then which also means the options market is really thin or not a lot of liquidity, and so you probably get bad fills. We use some quantum stocks in ULTY, of course. I'm sure we're going to have an ULTY conversation, one of your favorite topics, which it should be. But we do trade some of those. But man, fills are tough. So having a fund or even like a basket, like what we do with LFGY, which is more crypto focused, or like Biggie or Soxy. Soxy is semiconductor, right? Having one about quantum, definitely on the docket. But again, we need some market cap to be able to handle the option overlays.
Mm-hmm. Makes sense. And
Yeah,
for
I mean,
ULTY,
it's got to be able to sustainable, right? You can't just like, oh, we started a fund and we can't trade it. That's not
yeah,
great.
exactly.
Yeah, yeah.
For ULTY, you already know the question. Why ULTY no go up?
But I would say with the exception of the last couple days, ULTY was outperforming the indexes, right?
Mm-hmm.
Like ULTY's actually had decent performance. Look, it's volatile. It's designed to be volatile. So when you have the sell off that we've seen in the last, we've had a couple of nasty days over the last couple of weeks, but still, ULTY is performing well, right? Like comparatively to the indexes. So I'm not, like you can't put remember total return, right? Total return when it comes to this. So
Yeah.
what would be nice is if everybody could use a total return chart, but we could figure that out. It's one way or another.
Seeking Alpha, that's the one I always use.
Yeah, they definitely put it out there.
Mm-hmm. You know what would be good? I think I've said this before. If you had like one on your site or like a calculator, a
That would be
reinvestment.
amazing, wouldn't it?
Yeah,
I wish
yeah.
I was in charge of marketing. They don't let me be in charge of everything.
You can only be like the lead fund manager, not the marketing guru.
Yeah, that's not my strength. But I
Yeah.
do think you're right. I do think a better way, well, total returns are reported, but having the ability to chart like what you're pulling up right now
Mm-hmm.
is great.
There
Yeah,
is
so
a big
pull that up.
difference. Yeah, between total return and price return, there's a huge difference.
Totally. Yeah,
Yeah.
exactly. Right. So
61.5% versus 5%.
right. But that's what happens when you have the high distributions. We know the story. I'm sure nobody wants us to go through that again. But yeah, the performance of ULTY, considering the stocks that we're going for, right? We're finding the most volatile stocks and we're selling options on those stocks. By the way, we're doing a lot of hedging as well, right? Hedging around earnings. That has absolutely paid off for us using those tactics, protecting against, don't have any more 50% losers in the portfolio, right? That kind of stuff. So all of that is proven to be positive for ULTY. So yeah, I mean, ULTY is like if you like the distribution rate, but you don't love the price action, then understand what you're buying, and that's just what you should expect, right? It's still going to continue to have the high distribution rates because we're going to distribute the premium that we earn from selling options. Really, the price action is less important to us than that, right? ULTY's focused around selling high volatility options or selling options on high volatility tickers. What do you got there? The distributions?
Yeah, because I think people that bought in like a year ago, they're like, "Oh, I was getting $1.41," and then now it's because of they take the
price
dividend
drops.
dropping as a
Yeah.
function of the price drop. Yeah.
Yeah. And you should have more shares from those dividends, right? So even though the price might be down, you should have more shares in your portfolio unless you took the cash. If you're going to take the cash, then you've decided to deliberately, divest to cash and not reinvest those dividends. But you should have a lot more shares. So even though
If
the
you're
dividend went
reinvesting,
down, but you have more shares, your total dollar income should be the same or more, especially
if
when there's
yep,
growth.
yeah, if you're reinvesting the dividends.
Yeah. Exactly.
And you've said on here, manage your shares before.
Yeah.
Let's see. Here's one. Could GameStop be added to LFGY on the rumor they may buy Bitcoin?
I love that idea. I
Yeah.
love that idea. We should add GameStop to LFGY.
Yeah.
I'm saying it aloud. My trader's in the other room, I think. You hear that? He heard it. We're good.
Yeah.
We're going to add it.
Speaking of your traders in the other room, we have a question directed for them. Looks like we got some haters on here.
Yeah. Let's see the trade you don't like there, Ralph Beans.
Do they hire traders who suck at option trading?
No.
This
Not
one
even
said,
going to
yeah.
justify that with an answer. But in all honesty, I think the question that we always get is I'm gonna guess what Ralph was talking about there. Hey, why do you keep buying that long? Stop spending money on the long leg of a call spread, right? So especially with MicroStrategy. So maybe that's where we're going. I Look, it's one of those things that sometimes it would be better not to sell the call spread, but to sell the call only, if you know what I'm talking about, right? That's the debate. When do you make that decision, sell the call spread or just sell the call? In those scenarios, you look at where MicroStrategy has been trading, which has been kind of like, like the direction of the stock. Today it was good, but it has been on the downtrend. You don't want to miss when it has that plus 15% day. And if you've only sold calls, because by the way, volatility is coming down too. So you've got dropping volatility, which means I'm not going to get as much income. I got to get closer to the stock to make my target income. And so when that whipsaw occurs and it goes higher, in that scenario, when it goes up, you're going to be capped, right? So you don't want to miss the opportunity to have that long call so that you can continue to roll up more often and capture more of the upside. Remember, it's still a long bias strategy when you're doing cover call strategies. So it's if there's any, they're following the rules and the guidelines that are set by myself and there are other senior traders. So I actually don't think I think our traders doing a hell of a job.
Yeah.
I'm going to give you a stat that nobody's heard before. I'm going to say
Yeah.
it to you. This is the first time we're saying it. So
Break the news on here.
a little breaking news.
Yeah.
So the volume, all the volume that happens out of I'm going to call them the legacy, the Zega traded funds. There's a number I could point to. There's a real number. We exceed more than 1% of all option volume traded in the market.
Wow.
All option volume, right? So, we must be doing something right there.
Yeah, very impressive. So 1% of overall volume.
Yeah. So if you take a look on the SIBO site, how many option contracts traded this week, then our volume will be, so far historically, has always been more than 1% of that number.
Wow, that's very impressive.
Yeah. I haven't said that publicly before. So you get the breaking news there, Coach.
Awesome. Breaking news on here. We appreciate it. Yep. Okay. Last time, so we talked about, this is a good segue because you're talking about locking in like the calls and all of that and holding them to lock in more of the premium. We talked about spreads last time, and I think you were implementing more of those as well.
Yep.
Yeah.
Sure. Yeah.
So,
we just talked a little bit about that. But yeah, most of the funds right now, especially in a dropping market, you want to have spreads on.
We actually had a really good question in Discord that I want to pull up. It was very detailed, so I want to make sure I ask it. This is in our Discord here. Let's see here. So this was on questions for Jay. Okay. I'm going to source a few of them from Discord.
Sure.
Here.
I can't see them, but I'm sure they're tiny.
Yeah. I'll read them to you. Let's see. This was regarding SDTY. This might not be the same thing, but we can jump back to it.
Love to talk about SDTY.
Yeah. So he asked in the fund description for SDTY, which is the direct competitor of XDTE. And I love that, by the way. I love that YieldMax is putting out so many direct competitor funds. It states that SDTY is an actively managed ETF that seeks income and capital appreciation. How realistic is the secondary goal of capital appreciation, and how will that be achieved?
Yeah. So all right. So the build here, for your option do-it-yourselfers, your home gamers, the build is a deep in the money call that goes out a year or so. So that replicates being long the market, right? We actually do it so we're actually earning a little income how deep in the money we are. So let's say it's like a
So
10 moneyness or 90% in the money kind of a position.
it's like a leap, kind of,
It's
but
it's
way
it's,
of the
it's
money.
a leap in time, right? So expiration is like a year out. It
Mhm.
might be December, but it's a long time out. And we go so far in the money that we almost spend the entire portfolio buying the call. So just being long a super deep in the money call means you're gonna have it's what we call a 100 delta position. It moves one for one with the underlying market. And on SDTE, we're talking about the S&P 500 index.
Mhm.
So that's how you get the upside growth. I have always said about the round hill funds that they are more growth strategy than income strategy, right? And that is the same for these YieldMax zero DTE funds. We're selling calls that are far enough out of the money that you get the full move many days of the market. Actually, before today, and I haven't looked where we ended today, but before today, SDTY was outperforming SPX since its launch. Now, it's only been a few weeks, but if you look at the performance of the two, SDTY against against the S&P, it's actually outgrowing it because we're capturing a large amount of the upside every day, plus we're getting income. And so the trick on a fund like that is you want to sell that strike that generates income, so it's additive, but you don't want to cap your growth. And so, without going into too much detail about how we select those strikes, we are in the morning every day looking and picking a strike far enough out of the money that we think will capture what the market's going to give. So that's how it's both growth and income, if that makes any sense. You should, and we've had some distributions already in that one. I don't know. You want to pull up the total return chart of
Yes.
SDTY versus, say, the SPY or SPX? And I
Mhm.
think you'll see, and look, it's minor, right? It's a minor outperformance, but it is outperformance in just a short period of time. Like I think we're only live at this point 3 weeks.
What was it? SPX
Sam,
versus.
SPX is the S&P 500. Yep,
Yep.
and that's the underlying index that we use
Mhm.
on that particular fund. And these are when we say zero DTEs, we put them. They're true zero DTEs, unlike Defiance. By the way, unlike Defiance, which is more of an income focused product, the WDTE, that is doing much better in a down market than both of these
Which
tickers.
one? Which one?
The WDTE,
Oh yeah. Okay.
right? So if you were just to look over the time period there, so put in SDTY, Sam, David, Tom.
TY. Yep.
Yep. Yeah, there you go.
There we go.
And if you take a look at that chart on total returns, they're going to be close. You got to go like the last,
Yeah. Let's do the apples to
just do
apples
like
here.
the
So
last
we
week or something
started.
like that. Yeah,
We
there you go.
started February 6th. So let's. Oh yeah. We can do last month basically. Ooh, look at that.
You almost got it. It's
Yeah.
weird what it's charting, but yeah.
It's such
So
a
there
low
you go.
time
Total
frame.
return. Yeah, it's hard to see the difference there. I don't think it's been
It's
live the whole
almost.
month.
It's
You got to
almost
go less than.
identical. Yeah. Yeah. So it was February 6th. It looks like.
Yep.
So let's do
So maybe
this.
go to 7th, so you get the full day in.
That was my birthday actually.
Oh, happy birthday!
Yeah. Thank you. Okay, so the 7th to, let's see, this gets glitchy sometimes. There we go.
Yeah, there you go.
There we go.
Yeah, so there's an outperformance against the market. So when the
I
question
see.
was, how can there be growth? There's growth based on the strikes we're choosing every morning. You're also, because you're expiring at the end of the day, if the market gaps up, you're not capped. You're already feeling 100% of that gap up, and then we're selling the calls, right? So it's that kind of combination that allows there to be some growth in SDTY. It is just like Roundhill, it is a more growth focused fund than it is an income focused fund.
Hmm. Very nice. Yeah, I see that it's outperforming. That's very impressive.
And look, we just started here, right? So like not making promises of future, but just the structure itself is designed to be more growth oriented than income oriented.
Hmm. Okay, now I'm going to bring up a article that somebody posted yesterday. This is
Oh,
going to be a
okay.
really, really big opportunity here, I think. Okay, so we had, I believe he's another YouTuber as well. There was an article from Tap Alpha. It's called "The NAV Dilemma: Why Synthetic ETFs Face Zero Growth Potential." Um, and he's claiming because they must pay out all the gains. If the underlying assets go up 5%, then the most pay you 5% in gains. So if the ETF's at $50 and the underlying appreciates and it goes up to 52, they'll pay you a $2 distribution, or they will owe tax on it. That started the discussion, and then we got into, somebody said no, they have to pay 90% of income. Stock price movement isn't income. And then there was kind of a back and forth, but basically what this guy's claiming is that somehow the funds are going to be end of the year exactly where they started the year. And he brought up 1256 contracts. It's 1256 rule. If an investment in a derivative instrument is held at year end, then it's treated as being sold at fair market value at year end, regardless if it's actually sold or not.
Yeah. So look, there's a lot to unpack here.
Yeah.
We could talk about each one of those things. This is, I personally, I find it kind of uninteresting with, tax treatment and return of capital. It's not trading stuff. And I fully understand 1256 contracts. What folks don't understand is that 40 Act funds get to do things that you can't do in a personal individual account. There are things like basket trade and swap trades that you can do. There's harpy trades. The tax treatment, fiscal year versus calendar year. Like there's different things that apply here. And without me giving any tax advice, right, I think there's a lot going. I would say get a 40 Act lawyer if you're going to actually start to make some of these assessments. It's clearly not true that the funds can't go up. Pretty sure Palantir's PLTY is going to be higher than where it started, right, by the end of the year.
Yeah.
And look, we're realizing gains all the time, right? We're doing it all the time because, we have to roll the synthetics. Those are taxable events. Absolutely correct. But at the same time, we're realizing losses on the short calls, right? So, or when we're rolling those spreads, right? And so while we're getting some gains and then we're distributing out the income that we made, sometimes that's return of capital. That's a whole different conversation on why return of capital is not a bad thing when it comes to options-based strategies. So, look, this is a lot of, I would say, not professionals in the space giving opinions and with limited amount of information and under a microscope maybe, or microcosm. I'm trying to think of the right word here. It might apply, but understand that 40 Act funds have different treatments when it comes to positions and taxes and distributions, right? A lot of that stuff were correct that you said in separate, but when it all applies to funds, it's different. And so look, I'm not an accountant. I'm certainly not a 40 Act lawyer. I'm an options trader. So I think these are all great questions. Let's get some answers for people if they really want to know the facts. We'll get title to kind of, this is why title's here. They're the administrator, they're the accountants, all that kind of great stuff. We can get that information out. And actually, we answer questions about that stuff all the time. I don't, but title does.
So if they call in, then they'll answer that for them.
Yeah, and if they don't have that information, then we'll get a professional help out, or send the information in an inquiry. We answer those too.
Yeah. And you made a good point too. Like a lot of people that ask questions are not necessarily experts, but as you know, everyone on YouTube appears or presents themselves at times as an expert.
Sure.
So that's what happens.
Yeah.
Okay. So that one, that was a big one that we got out of the way there. Let's see now.
I see somebody asked a question about why are we not long the stock in an ETF versus why do we do the synthetic? Again, here's an ETF rule, right? You can't be concentrated, even in a non-diversified fund, which all the yield maxes are. You can't be concentrated more than 25% in any issuer holding. By issuer, we mean stock or ticker, right? So if I was to buy 100% of a fund in Tesla, and I bought 100% Tesla, I'd be in violation of ETF rules, right? So again, you got to understand 40 Act rules here. So we use the synthetic backed by treasuries as a way to be under 25% of the price of the option. So even though it feels like you're 100%, this is the beauty of options, it feels like you're 100% exposed, you have less than 25% in the options themselves. So that's why Yield Max works the way that it works. The other way to build these is to use swaps, which are basically just kind of bank notes, and there's a little complication with swaps. But if you look at the that SMCX fund, they use swaps, right? Basically it's a note that says whatever SMCI does, this thing goes up 2 times, right? That's just an agreement. It's its own kind of bank paper, and that goes into the portfolio, and that's it. We don't use those for YieldMax, we're the first to do these with options and structured combos, right? They're the synthetic combos and options, and we are able to navigate the ETF rules using that.
Okay. Now that's called 40 what?
So the 1940, the Act of 1940. So that's
Yeah.
yes, almost 100 years old, 85 years old.
Wow.
That 1940 Act enabled. I mean, you have to study for this when you get your 7 and your 63.
Yep.
Enabled the creation of investment companies like mutual funds and ETFs. So
Mhm.
there's all kinds of rules. So we just call them 40 Act funds, but the 1940 Act, and that's fun to read when you have to read that. If anybody here who has their 7 knows exactly what the 1940 Act is the legislation that allows you to create investment companies. Sometimes it's called the Investment Company Act.
Okay, so you call them 40
Act funds.
40 Act funds. Okay.
40 Act funds.
Interesting.
That's why,
So,
and there are lawyers that specialize in 40 Act funds. Obviously, Title has a bunch of those.
oh, of course, I bet, because I mean, our industry is one of the most heavily regulated.
It sure
I'm
is,
sure.
as
Yeah.
it should be.
Yeah. So, interesting fact. So I was studying for the Series 7, and then I kind of made a little bit of a career shift. I got a job offer I couldn't refuse to basically work on, the internal side. So I never ended up getting it, but I was on the track too.
There's now a test. This didn't exist when I took my test in '99. That was a long time ago. There's now like an SEI certification that you get, right? Securities industry, SIE, security industry exam. That's kind of the precursor now to the Series 7. That's a good one to take, right? That's it's definitely it's not as hard. They actually some like my son's high school administered it too. Like you could take it early on. You don't have to be in the business to take that kind of.
Oh, in high school they're offering
You could
courses
take
on it?
securities industry exam. Sure, in high school you could take that.
Oh, I love to hear that. Financial
Yeah,
education in schools. That's what I'm talking
yeah,
about. Yeah.
absolutely.
Yep.
Yeah,
If I run for office, that's going to be my motto.
love it.
Financial
We
education
should
in schools.
should
Yeah,
educate people. I mean,
absolutely.
we're a little lack on that in this country. Lacks on that.
Yep. Oh, wow. I thought somebody was trying to get to the front of the line here, but they just did a little thank you. That's awesome.
You're
Yeah.
welcome, Dan.
Yeah. Okay, let's see. We got a backlog here. Working Investor says, is it a fair assumption the portfolio ETFs, GPTY and LFGY can have more hedges set up due to the flexibility of the prospectuses?
Yes, absolutely. We can, right. We have full flexibility. What we call it like the ULTY prospectus. We can do pretty much anything as long as we are sticking within the guidelines of income first, growth second. Yes. And actually, we, GPTY today, like we had hedges, so the day's over. So I think I could probably talk about it. There's nothing you could do with this information. We had hedges on, for example, in GPTY. We took them off this morning, right? So you could be active. We took half of our Bitcoin hedges off on LFGY yesterday. So actually, we didn't take them off. We sold puts against our long puts, so we legged into a spread for income, right? So we could definitely use some interesting tactics with those funds, along with ULTY.
Interesting.
Yeah.
Okay, yeah, we have a backlog here. Okay. Oh, we got Max on. Yeah, welcome, Max.
Hey, Max.
Surprised feet and 5 are still holding Tesley. Definitely momentum on that has flipped.
Yeah, I mean that's a Dorsey Wright decision, right? So that's so for those of you that don't know, Feet and Fibby, we partnered with Dorsey Wright, which is really a very popular, famous name on the street for
Yeah.
using momentum indicators. So that's why Stillhurst recognizes momentum here. Momentum is the kind of the Dorsey Wright calling card. And so you're right. And so we're coming to the end of the month. We'll see if they make a rotation there. They do tend to look at indicators on a longer term, but the Tesla move lately, I would agree, doesn't seem to have positive momentum. But I don't know where it's broken down. I don't have a Tesla chart in front of me, but is it crossed through a 200-day moving average yet? I'm not sure.
Yeah, I can pull one up here real quick.
Yeah, that'd be great.
Do some quick basic
Oh,
technicals.
it bounced off of the 200-day today.
It's been dropping. I don't know if it's because Elon Musk. I mean, he's been in the news a lot. I mean, 292. We went up 4% today.
Yeah.
For the year.
Can you throw a 200-day moving average on that chart?
Yeah, let me see.
It'd be like in maybe not.
I can do it on Google or on Yahoo.
Yeah. So I think when I'm looking at it right now, and wow, it opened right at the 200, dropped below, and then moved off of it. So they may not take it off, right? If they think staying above the 200-day is important. That's just a standard technical indicator that the street generally uses as is the stock positive momentum or negative momentum, that 200. But that's almost a year-long average, right? A 200-day moving average is almost a year-long average price. So staying above the 200-day is kind of generally accepted to be bullish, but man, it bounced off of it. So you got Bollinger Bands on there.
Yeah, these are my technicals here.
Yeah.
I should have a simple moving average on here.
That's the one to look at. You got it.
Yep. But yeah, so it did, like you're saying. I
mean, it's almost textbook what it did today.
Yeah.
I'm not making a recommendation on Tesla, but if you were a technician, you would definitely pay attention to that data point.
Yeah. Well, I mean, so Bollinger Bands. So from my limited technical analysis, because it's definitely not my expertise, but I always feel like when the band's narrow, that's going to be a signal of maybe a trend reversal.
Could be. Sure. Yeah.
And I've got RSI and MACD on here.
RSI is a good one. RSI is always good. MACD is a good one.
Mm-hmm.
Yep.
Here we go. Right here, we just want a simple moving average.
There you go.
Yeah. 200-day.
200.
Yep.
I didn't actually know it was right on it. Yeah, if you could zoom in there at the.
Oh, it literally did cross below it.
I'll tell you, it dipped below it. It opened on it, dipped below it, and closed above it.
So one might suggest, not that we're suggesting, but one might suggest a buy point. I mean,
if that was your indicator, you got it today.
Yeah.
If that was your support indicator, you got it.
Yeah. Okay, I'm going to bring up a question here, and then I have to close my camera for just a second.
Yeah.
What's the difference in strategy of LFGY and ULTY?
Yeah, I mean, ULTY is any stock. We could pick from any stock or any ETF even, whereas LFGY is focused on crypto industry-based stocks, even holding crypto-based ETFs like IBIT. We also will use an LFGY, a new SIBO index. It's actually an index based off of Bitcoin ETFs. So it's CBTX, but we might use the mini of that, MBTX. So why I'm saying all this is LFGY is more focused on crypto, and ULTY is kind of more broader market where we could, you could put Foot Locker in there. You could put, I think we had Victoria's Secrets for a while in there, right? You could be anything. You wouldn't find those in LFGY. LFGY is more crypto focused. All right, Coach is gone. Who else can I answer a question for? It's all right, Coach. I'll carry the stream. It's no problem. Let's see what else we got here. I'm just looking through the questions that we had here. Somebody had a rock question about 19As. Yeah, that's another one about.
Sorry, Jay.
That's okay. I was just answering a question about rock and where it shows up on the 1099s.
We want to talk extensively about return of capital. I'll let you run away with that.
I really don't want to talk about that one, but it's by the way, not because it's a bad topic. It's just, and it matters, right? Of course, taxes matter to all of us, but my understanding is we've kind of sent all of the return of capital data to all of the custodians. So at this point, your custodians should all have that information on the 1099s. Again, I don't know which Steelers, which custodian you're talking about, right? But they should. It should be included in the amount of the distributions that qualify. The amount of qualified versus non-qualified distributions, right? So qualified should be rock. Non-qualified should be what you're going to end up having the tax liability for. So just kind of general brokerage questions, but that seems like it's more of a question for your broker / custodian than for us. But I know that we've delivered all of the dividend information to the custodians already. Any other comments come in? Let's see. Are you looking to reverse split Coney or others? No, I think we hit on the reverse split stuff already. My feeling here is Murney is a perfect example of us not doing a reverse split, even though the underlying ticker has dropped significantly. We know it's a little bit of a dissatisfier. Hopefully, by not doing the split, we don't think it matters when it comes to performance or distributions or anything like that. So it's really, we don't have to. I think at this point we're not going to. So there's no plans. Of course, that could change, but there's no immediate plans to do any reverse splits. Let's see what we got here. So listen, are you planning to have an index type fund which will have all ETFs? So YMAX, I think YMAX might be something that you might be talking about there, right? Where we have all of the YieldMax ETFs, the single stock ETFs, in kind of a fund of funds scenario. And actually, I love talking about YMAX. It happens to be one of those funds that you're still going to get a notably higher distribution rate, like 30-40%, but your volatility, the risk of it is going to feel more like the NASDAQ versus taking single stock risk. There's a handful of stocks that we do yield maxes on that don't have as much risk or as much volatility as the indexes, like the JPMOs or the XOMO, the Exxon one or the Disney one. But generally, our individual tickers have more volatility than the indexes. But when you combine them all together, it lowers the volatility of the portfolio. So YMAX, if you're looking for kind of a fund of funds, YMAX is a good something good to consider. The JEPI change, it's a little obvious there without me commenting why, but there might have been another firm that told us to get rid of the JEPI name that you might think
Oh,
of.
yeah. I can think of exactly
Without
who that would
saying
be.
anything,
Yeah.
So I can't comment on anything specifically, but you can connect the dots there.
Yep.
Max says, could any more people sell Murney, though? I'm going to tell you something, Max. Money flows into Murney almost every day. I think there's a lot of folks that are kind of waiting for are they going to have, is Moderna going to have kind of the cancer vaccine, right? Are they really going to crack that code? And at this point, that's the kind of thing that would drive that stock, like that kind of news. So we have money flowing into Moderna almost daily. It's a Murney almost daily, despite the price action on that. So, yeah, there you go. Interesting.
I'm not going to ask this directly, but I will make a comment. So you guys do have quite the loyal fan base out there. Like, you have people that a fund can drop 90% and still pay out some dividends, and they're totally ecstatic. So that's
okay. Great.
That's awesome.
That's good.
Yeah.
Look, I think there's obviously a lot of competitors now. I mean, there is definitely, we've had a first mover advantage. We continue to do things that I think are unique and innovative, like the inverse funds, like putting together an LFGY type of a fund. I'm trying to think of something like, while we were, Defiance was what I would call the first that did the zero DTEs, but, continuing to say, look, people like the Randall products, we think you would do that. So we'll put out the SDTY or the QDTY competitor shortly, soon to come as the Russell competitor to that. And we'll see how we do. Like, we're fine, like if people want to go kind of after us a little bit, firms want to do that. And I can't blame them. The funds have been really successful. Nothing says we can't kind of take the same type of a position as well in the marketplace. We think we got a pretty good trading team, despite what somebody thought before, that we can keep up with our competitors there. And just our approach of activity, right? We're not a kind of set it and forget it. And even though a lot of funds put on their call and call it a day, like if you actually look at our activity on SDTY or QDTY, we are more active on those, despite it's still a 0-day option. Actually, do you want to pull that up, Coach? Do you think you can get to the YieldMax site?
Absolutely.
Go to YieldMax ETFs, and then we could go to the 0 DTEs, and I'll show you something there.
Okay. I do want to ask you a question, too, while we're on the site, but yeah, we'll cover this first. Okay, so you said 0 date to expiration funds. So you got 2 of them now.
Yeah, just grab that one right there.
Okay.
And then if you scroll down and look at like the intraday trades, hopefully that might have updated already. But if you scroll down a little bit,
oh yeah, we can see some of the on the main page here. We can see some of the
yep, a
trades.
little more. There you go.
Yep.
So see where it says intraday download.
Yep.
Click that. Now it's a little late in the day, so all the funds might be in there. But let's just see. You could highlight the SDTY trades. And the only reason why I want to highlight this is even though we know that there's a competitor out there with this product, we are treating it different, just like we would the yield max approach, which is, hey, when it makes sense, you get active on the options, right? We're not set it and forget it. I don't know, did it open in Excel somewhere for you?
Yeah. So what I'm going to do is basically copy it from there and put it in a Google Doc so I can share.
Oh, that's cool. Great.
Yeah.
Great.
So yeah, I have all the trades up here. Yeah, this should only take me a second, but yeah, keep talking about that while I do this.
Yep. Let's see. I'm just taking a look at some of the other questions. There's a whipsaw question. Whipsaw is what concerns me the most. Cover call strategies. Yeah. So this is why we use call spreads for, whipsaw effects are the worst impact to a covered call strategy, right? So you want to be long, but the market drops. You're selling calls all the way down for income, and then the market rockets back up. And that is what we talk about when we say a whipsaw. And so in that scenario, having the call spreads at your disposal is really meant to minimize that. SMCY was a good example, right? It was down. And when it rocketed up 12%, we went up 9%. Even though we rolled and traded that day, we still captured the majority of that. I think we captured 75% of the upside move. Palantir, their last earnings, right? They had a gap up of a pretty big amount. It was up 28%. I think we were up 22% that day in that fund. So having those call spreads, that tool itself really does a good job of, yes, you're never going to get it all. We know we're going to give up some of the upside, but using that function really helps. And to my knowledge, I think we're still the only one on the street using the call spreads versus just the short calls. So you want to try to do a search there for SDTY?
Yeah, so I've got all the trades up here.
Yeah, I guess they're all posted already, which is fine. So then it's all public, but there's probably, you can see we do. There we go.
Right here.
Yep. Right. So what you could see is those, all right, line 379 and 380. Those that's just the, let's see, which ones am I looking at? Yeah. So those are, those look like our long, we added some, looks like we did a little trade there, added some of the deep in the money calls. But what I really want to show is our the SS is the short sales. Those are our entries, right? So line 376 was our first trade of the day. We entered and we sold 5905 S&Ps. And then later in the day, we bought to cover the 5905s, one down. So we sold it for 872. Bought it back for 347. Great. So we put over $5 in our pocket. Then we turned around and sold 15 strikes higher, the 10 strikes higher, the 59.15s. And we brought in another $2 for doing that. Right. So we unlocked $10 more, and we still end up making just shy of what our entry was. And so where the market closed today at 59.54. So we got to unlock, 7-8 more points by being active in that role. And that, so, that's what we talk about, that we're pretty active. And you can see we did the same thing in QDTY. If you scroll down a few more lines, we're going to be active with that. So we, again, short sold, you could ignore the XNDs. That's kind of just a partial trade, but sold for $43, bought it back for 20, raised the limit up 110 strikes, right? So you can see the strike price went from 20,650 up to 27,60. So we went 120 strikes higher by cover buying back and selling a new one, right? So again, unlocking more of the upside. And so that also maxed out because we ended up at 2884. So again, it's just one of those ways that we're trying to be active, still zero DTE, but this is obviously a lot of activity in a strategy that has the same day expiring options. So by the way, obviously a little inside baseball. I haven't walked anybody through those trades before, but if you're watching that strategy, you'll get these trades intraday. So if you take a look at, say, 10 in the morning, you'll see our entries. Maybe we've already rolled by then too. So
you're
again,
posting them. You're
we're
posting them
posting
to
those
the
in the
site,
morning.
and
Yeah.
that's only 30 minutes after market open.
Yeah, we usually post within 30 minutes. Yep.
But you're getting a lot of action in that first 30 minutes.
Absolutely.
Yeah, yeah. Now, what security is this here? This NDXP?
NDX is the NASDAQ 100
That's
index.
right.
So that just means it's the PM settled. And then the XND is the micro, it's the 100th. So, we do
Yeah.
72 of those just because the assets we need, you can't round exactly to the value of the index. So there you go.
I know my DIY audience is going to be following this really close.
Yep.
These are big wins here.
Yeah. So you made 20
these
bucks.
two-
And don't forget, we sold
yeah,
another $5 on that one, right? Add in another
right.
$5 for a total, right? So we made in that scenario $28. Right, that line 385 is another sell for income, and same thing with line 378. We sold for another almost $2, $1.97 on top of the 525. So, and then that's how Now look, the market went up. We will be capped today because we didn't unlock all of the upside because the market had an unexpected move. Almost had a 2 standard dev move today.
Yeah, it was like way down and then way up. It seems like it kind of liked the whole Zelensky thing that happened today.
I mean,
I
it
don't
didn't
know.
like it when it was happening. I'll tell you that.
Yeah, but like the aftermath, I guess. I don't know. It's all over the
Exactly.
place.
Exactly.
Yeah. That's really awesome. A lot of my audience actually, they're doing the same thing, but and myself included, on funds like NVDL and like SMCX. And the way NVIDIA moved this week, it was crazy. I mean, like you said here, then you lock in some quick gains and then you roll it, and then
Yeah, I mean, we're trading, right? We're actively trading these things.
Absolutely. I'm actually going to start reviewing the trades more. I'm going to really like delve into this and start doing. I think that's a lot of like what Rod does too, right?
Yes, he does.
Yeah. That's definitely one of my New Year's goals. 2 months in. Okay, next question. So I wanted to actually talk about these Dorsey Wright funds. I actually bought into one of them. I really liked the concept of it. And you did go over this before, but can you just explain again at a high level to the audience that doesn't know what Dorsey Wright is?
Oh yeah, so Dorsey Wright is a firm that is what I would say specializes in technical analysis of momentum. There's a huge history with Dorsey Wright. They've been around a long, long time. They have a ton of different funds out there, mutual funds and ETFs. We partnered with them to try to pick the 5 YMAX tickers where the underlying has the most upside momentum, right? So let's say, they would look at Tesla and then say, okay, you should put Tesley in, or they would look at Coney and, coin and say, put Coney in. So they will pick from our universe of single stock tickers and based on their momentum indicators, pick the 5, it's only 5 underlyings that we will hold in feet, short for featured, right? Featured YMAX. Then in FIVY, we will hold 60% of the YMAX ticker, and then 40% of just the long stock. So it would be a position of, if you got 5 of them, right, you could divide that by 5, but you would have, 8% Tesla and, 12% Tesley if that made the list, right? So it's using upward momentum indicators to pick the underlying stocks and corresponding YMAXs.
Right.
So that's it.
Yeah. And so some of these are going to appeal to the growth audience too. In fact, the biggie funds, I'm sorry, the biggie fund.
Biggie's in the target 12s.
Yes.
Yep, Biggie's right there.
And Soxy,
Yeah, so these two are a little different. Those hold more than 5. Those hold a much larger portfolio. Biggie's got about 50 positions, and we sell income just to make 12% and unlock the rest of the upside. So again, these are more, I would say they're a little less interesting to the do-it-yourselfer and retail trader. They might be if you're looking for more of a, large cap exposure, and you're not as interested in the high yields. You're more interested in a healthy yield of 12%. but you're more interested in growth, or you're more interested in the sector, like SOXY is the semiconductor index that we're using. So it's all semis in there. But again, it's a little more of I'd say this is more of a competition for the QILDs, JEPs of the world, JEPQs of the world, right? Because it's less about the yield and more about the thematic ETF or the exposure to the sector and having growth alongside of it.
Certainly. Yeah. A lot of my audience is growth too. And I know actually me personally, I bought some Biggie.
Yeah. I mean, look, it's if you're looking at the biggest stocks, it's kind of an S&P exposure, but it's got a little different weighting, and Biggie's doing okay. Let's take a look where it is year to. It's flat for the year. Which this has been a pretty volatile year so far, so I think it's doing fine. But again, the holdings aren't going to rotate very often in Biggie, right? I mean, the largest stocks in the S&P don't change very often, so the holdings are fairly static. I mean, we will do a rebalance from time to time, but the holdings aren't going to change, like say ULTY, for example, or FEET or FIVI, where the underlying holdings will be more dynamic.
That's awesome. Okay, and yeah, it's a lower dividend, which remember how long did we talk about that, where we had a lot of questions. Hey, can we get lower dividend but more stable NAV, right?
Yeah.
Even though you are yield max, like
It's
you
all
said,
about max.
there's a place in everybody's portfolio for yield max. That's like your motto.
I mean, it's kind of like the name is the promises in the name, right? This is what it's all about. It's about high distributions. What you want to do with those is up to you, right? That's kind of the point. So
we answered this one already.
Yep. Kind of.
Index type fund, which will have all.
Yeah,
ETFs.
I hit on that one while you were
Yeah.
adjusting your camera.
Yeah, that was my apologies.
Okay.
Yeah. Okay, let's see what else we got here. Is it possible to have set average income per month for consistency, or does that just defeat the purpose?
No, like if you we can do that if you look at, say, like some of those portfolios that we just talked about. Now, if you like Biggie, SOXY, it's kind of a set number. Even like GPTY, right, is kind of got a set distribution rate. It can vary though. I want to tell you more. I can't tell you more yet, but this is a request that we've heard before, where it's like, say there's a set number on a single ticker, right? In that scenario. So, and that's, that is, I just keep an eye out for any new filings, right? Where we actually have more of a set number, still a nice number that would be notable enough comparative to our competitors, but more about a little more lean towards growth and all about the excess yield.
Leaning towards growth, but focused on excess yield.
Yeah, I mean, not as much. Like right now with like NVIDIA,
much,
for
right.
example, NVIDIA, we go for as much yield as we can get, right? As much yield as the market will get. But, one of the other things that I would say is we know not everybody wants to get 50% distributions. They'd rather say, look, I want covered call income, but I want to capture more upside. So, bring that distribution down a little bit, release more upside, right? So we've heard that.
Yeah,
I think that's what this question is about.
Now, some of your funds are actually starting to be invested in the underlying themselves versus like the yield max versions of the underlying.
Give me an example.
Isn't it, I want to say one of the, like Biggie?
Oh, yes. Okay. So when we don't have that concentration problem, because there's 50 stocks, you won't have that 25% concentration problem, right? So if I can own the underlying stocks, we will, right? We'll definitely do that for sure. Yes. We will do that for time. But on a single stock, unless it's like an ETF. So for example, well, still it all depends, right? So there are some ETFs like the Defiance SPYT, right, where we hold IVV and sell daily call spreads. You could do it when the underlying is an ETF, but when it comes to yield max single stocks, you can't. You fail the concentration rule.
Right. Yeah. So that's the 25 concentration rule that you're saying, right? Yep. Okay. And Max said something about if it wasn't for YMAX, would money still be flowing in? I don't know
Yes.
why. Okay.
Yeah. So money is still flowing in. Certainly YMAX. So Max, you're not wrong about that. Whereas a fund of fund is feeding other funds, like it's feeding the Disneys of the world and the JP Morgans, the JPMOs. However, like Tesla, Nvidia, MicroStrategy, Coinbase, like those still have flows. Everyday Palantir's got a lot of flows, right? So if on particular stocks, there's definitely inflows as well. Yeah. SMCI, that's an interesting one. People love the volatility.
Absolutely. Let's see here. Would you consider defensive stocks like Costco, Chevron, AbbVie, Home Depot, Union Pacific, and an ETF?
Again, some of those, like you could put those in like a basket and do like a biggie approach. And some of those are in biggie, by the way, right? Those holdings are in biggie. So that might be it. But, you don't get the volatility on those, right? Like we just talked about, like Disney and JP Morgan, like you don't get a lot of it's just not interesting to people, right? Certainly not the do-it-yourselfer crowd. I have had advisors that say, hey, I liked where Disney was in the chart, and they'd buy it for a short period of time. They'd like Dizzo for that scenario. But generally speaking, I think if we saw more inflows to more defensive and lower volatility stocks, we would launch more, but nobody's really buying them. So it doesn't make sense to put out an ETF that nobody wants. So, or there's not a critical mass desire in it, but hopefully like the biggies of the world could help out with that.
Yeah. Okay. How many portfolio managers do you have that work on the daily trades?
Like what we just showed with the SDTY and QDTY.
Mm-hmm.
4.
Okay.
Right. I mean, that's not their only job, obviously, because that's only, we just saw 4 trades. That's not 4 people's life. But there's quite a bit of people that have input into those trades throughout the day. Yeah. I'm one of them, by the way. I love watching those.
Yeah, I bet. Let's see. Thanks. Yeah, he said thank you. YieldMax is the only one doing the credit call spreads. We got a thank you for GPTY. That's all I ever needed. Similar to GPTY, LFGY. Can you also please have a portfolio fund for the semiconductor stocks? I'm sure you have more in the works.
Yeah, so we have the SOXY one that has the 12%, target, the target 12 distribution. That is the semiconductor one. It would be I think we filed for Chippy, which is a portfolio for ETFs. I think so. I'm just looking at some more. I think we have definitely filed for one. We will. I'm sure that's something that is on the docket to launch. I don't think we've announced when, but we filed for one.
Awesome. He says Neos has it in their perspective they could do spreads also. Doesn't think they do it. We'll skip over some of these for obvious reasons. Chief Nav Erosion Officer. People or something.
It's okay.
Yeah. Okay, let's see. We'll take like one more question here. Let's see now. I will comment, and I've told you this before. I mean, the naming conventions of these funds is pure genius. Like GPTY, the LFGY, like the Tom Brady. Let's effing go. Yeah.
I'm glad you picked up on that. Yeah, that was a fun one, right?
Yeah.
With the crypto stuff. I mean, my favorite of all time is the inverse Tesla one, right? Crash, CRSH.
Crash and dips.
And
yeah.
dips. But I think Crash may be one of the best performing yield maxes this year.
Mm-hmm.
Right? I think it's up 20-something% this year. So, and that means Tesla is down, right? Those things are inversely linked. But no, look, it's part of the name is always kind of, it sells itself, right? It explains what you should be getting. So although we have come up with some funny names we have not launched with.
Yeah.
But,
yeah, we'll see those.
There's a little fun convention we have with the naming process.
Mm-hmm.
I would say mine never get picked. I'm not nearly as original as some of the other folks involved here.
Really?
I don't think I've picked many of the tickers at all.
Oh, okay. Interesting. One final question. So on a macroeconomic level, has your outlook changed at all in the past month as far as like the market and the economy?
Um, so my look, and this is not advice. This is my personal opinion. We don't use this for any trading decisions,
Hmm.
but it kind of feels like after the last 2 years, a little settlement. Like I think I've said, this we probably have a sideways market through May, and then maybe you could unleash back. Like the economy's in pretty good shape. The numbers don't look terrible. Yeah, there's always a little weakness here and there, maybe consumer confidence. But I love, going the other way of the crowd when you ask for, sentiment, right? When people are super bearish, I love getting bullish. But generally speaking, like, I don't know. I just ask folks, like, who doesn't have a job that wants one? Like, that
Hmm.
seems pretty easy right now. Employment is great. Do you know anybody that has canceled a vacation? Real Like, has anybody, like, is there, like, when you think about like the things that matter to core America, I think uh economically we're in a good spot. Now look, the market is generally 6 months ahead of what people feel in their wallet and their job. So, but what are we, like, what were we, 4% off the all-time high? Like, the market's doing fine. I
Yeah.
know we're kind of flat after today. We're probably up 2% for the year, but with a little sideways market is probably expected. With second half could be strong, but who knows, right? Like, I don't know. We don't know how it all resolves, but I still think generally economic outlook is strong. You still have this potential, and I say potential for the Fed to cut rates. They're not going to do it anytime soon. Obviously, they haven't licked inflation. By the way, it's really hard to beat inflation down without a recession, which is why we
Well,
haven't really seen it pull back yet.
and part of the reason I asked my question, because you've got all these people that suddenly care about costs, and it's like, where were you for the last like 3 years?
Yeah.
You know?
Well, different group. Yeah,
Yeah,
of
yeah.
course.
But I also will say too, like, so Powell, he cut rates like back in October, and this was one of the things I had an issue with him, because like he cut rates, and then all of a sudden a month later he's like, oh no, we don't need to cut rates anymore, and then so it's like we're kind of going back and forth on cutting rates.
I think it's appropriate that their posture right now is probably appropriate where inflation is and uncertainty is. Like, look, you want to save those bullets for when you need it, right?
Right.
I mean, the Fed really in 2020 bailed us out of the pandemic. I give them full credit, right? I
Absolutely.
mean, they
Yep.
did everything they could. I don't know if you remember, they were buying bonds. They're buying corporate bonds for stability. They were buying bond ETFs. Like, they
Hmm.
bought HYG and SJNK. I was like, wow,
Yeah.
right? So, like, the Fed wants to use the bullets that they have, but there's no need to use them right now. Things are fine. I think
Hmm.
it's appropriate they don't cut right now. Yes, everybody would like their credit card rates to be a little cheaper. I get it. Yes, I would move and buy a new house if mortgage rates were lower. Totally understand that. And so that's why it is a restrictive policy. There's some restrictiveness here to cut down on spending, which in theory is supposed to bring down pricing. But I don't think it's necessary at this point. But again, my 2 cents. What do I know?
Yeah. Yeah, and part of the reason I ask is this past month the market's just been a little crazy. Normally, like my thesis is like, a new administration comes in and things are kind of like, at least for that first year, market kind of runs up smooth, and we still could see that, but I don't know, last this last month, just with certain stocks, I would say, not with the whole index, but
Yeah, like
yeah,
I think that's healthy.
yeah.
It's healthy markets. Somebody
All
asked
right.
about my hair. I don't know.
Yeah,
It looks
we'll
okay today.
we'll
There
do
you
that
go.
one.
A lot of hair gel. Yeah.
Yeah,
It's getting white, by the way. It's starting to get a little lighter here.
it's getting
So
white. It's all that all these new funds.
it's all the
Yep.
work.
Well, anyway, this was great. So glad to have you back on. And yeah, any last words for the audience?
Now, again, just thanks everybody. Appreciate it. Sorry we had to do it on a Friday night. Not everybody, I'm sure that's just what people want to do is a Friday night. So thank you, Coach, for your flexibility on this. Appreciate that.
Absolutely. Yeah, and
Um,
honestly, the audience, the views are the same as they typically
okay.
are. So yeah,
Awesome.
thanks again, Jay. We will talk again soon, and hope everything keeps going up.
Yeah, for
Yeah,
sure. Let's growth is good.
yeah.
Growth is good stuff. By the way, to Eric, yes, we've considered put spreads. Stay tuned. Max can tell you all about lightning spreads. there
I'm not the options expert. I'll go read Reddit articles that, oh,
you go.
this coach guy doesn't understand options that well. I just show my P&L for the year.
There you go.
Yeah.
That helps.
Anyway, all right, so we'll end it there. If you have like a minute, we'll just stay on after.
You got it.
Sounds
Thanks,
good. Okay.
everybody.
Thanks, everyone. Remember to like, comment, and subscribe, and join Discord, and we will see you all in the next one. Take care. Good night. Bye.